Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey traders, checking in, and the bears had nothing, and we have the tech sector saving the day yet again, and that was pretty evident really right from the bell with the start that QQQ had. Straight up for 30 minutes, and it didn't do what XLF did yesterday. Healthy consolidation into continuation. We kept the 5-minute uptrend intact for the first 2.5 hours of the trading day. Pretty convincing when you see that happen, and the bulls kept their absolute complete control the entire day. Bullish engulfing candle, blue sky breakout for QQQ, and again, it's just another day where we close weak with zero bear follow through. And look at this daily chart for SPY over the last 3 weeks. 2 red closes, both followed by a complete recovery the following day. So it's impressive. If we see a bull break of 339.61 and a new all-time high, our new daily higher low will be 335.22, but we have to break that resistance level first. Checking in on IWM, we did drop to a lower low, so this daily consolidation now, you can call this a downtrend. It's more convincing with this little lower high and lower low. The weekly consolidation is more clear. Could it still be a weekly bull flag? Yes, you could make the argument, but we're clearly seeing weekly consolidation, and that's something we have not seen in SPY in quite some time. So that is a notable difference between the two that we're going to have to keep watching, and the bulls will have to regain the daily uptrend in their favor for a weekly higher low to be set. So we know the QQQ bulls are back in full control. 274.86 is our new short-term line in the sand support level. No resistance in blue sky. XLV, anything above 105.13 will be a daily higher low. That's our line in the sand level. Bulls have to regain the hourly trend back in their favor if we're going to say our daily higher low has been set. XLF, big gap down, still struggling on any bounce. So the laggard sectors are weak. XLF, the daily time frame, less clear to me than the weekly. So I'm going to be watching for a daily trend change back to the bulls to give us a weekly higher low compared to 22.49. We could pull back another dollar before that happens. So a higher low compared to 22.49 is the most likely scenario, but there's a lot of range as to where that could happen. What I would need to see to start setting up a weekly higher low forming is a big enough bounce to then anticipate a higher low is the most likely scenario to set up the potential of the daily trend change. So we're nowhere near that happening right now. And for me personally, I don't have any interest in the financial sector or the laggard sectors bullish right now. I gave them a chance. I entered bullish on this break of all these 24.40s. This was a very important resistance zone, and I entered in the 24.60s and then exited the second half when 24.93 broke. That was me giving the bulls a chance. If they wanted to keep my trust, they would have seen that happen. We didn't. My trust has been breached, and now I am not looking to play the laggard sector bullish anytime soon. Biotech sector. So we have the daily equilibrium continuing to play out with our high, low, lower high, higher low, lower high. Scouting a higher low, anything over 108.19 is worth watching the biotech sector next week because we will likely see this range break next week. We need the hourly trend change back to the bulls, which did happen here at the end of the day. And if we can get a little bit of follow through, a break of 114.59 would be notable. That would change the daily trend bullish. That would shift the weekly momentum back to the bulls. And that's what we're watching in the short term. Can we break 114.59? That resistance and 108.19 are the most important support levels for me. Gonna work on my horizontal freehand line drawing. SMH. So SMH, anything over 166.74 is a daily higher low. We're still holding that level. The size of this pullback, though, has the bulls cautious of the head and shoulders pattern, where this would be the left shoulder. There's our neckline. This is our head to an all-time high. Here's our right neckline. If we bounce and get follow through and fail to break 174.33, which is multiple percent away, and then roll over and lose the daily uptrend, that means zoom out because weekly consolidation, which is certainly due, is underway. So we're going to be keeping a close eye on that. And it's very different than QQQ. We were very correlated to QQQ. And at some points back here, we were even leading QQQ as a bull. But the size of this pullback is shifting things a bit. So if I want to be an aggressive bear, I'm going to look for a short and a top fish play. Maybe I enter at 171.90 and I put my stop at 174.33. That's the way that I play against momentum as a bear. I have to have a level that I am playing off of. And GRWG is a name that I was looking to short. We opened lower, which I didn't like that setup anymore. But on the bounce, we had a really nice top fishing play. The high of the day was 21.14. We held the low of yesterday. We bounced. We knew the most likely scenario was just an hourly lower high, and we rejected from the high of the day. That was a nice top fishing play. I wasn't trading today. We rejected from that resistance by 30 cents. I took a couple trades today when I was at the computer for a short period of time, but not in my zone and in my routine. So didn't get that trade, but that's just an example of what I'm talking about. The bulls have had complete control for quite some time, and if I'm going to play against that, I have to have a clear level that I am putting my stop behind, and it has to be low risk. So we got the VIX, no follow through at this point. If I were drawing the downtrend line, it would be right there. We did break it. So it's not game over for the bulls, but obviously it's not what the bulls want to see. They want to see the just straight out of nowhere big bull move that catches everybody off guard. This is a break of one lower high resistance. We did not break 24.90, and now the bulls will have to hold this base of support and try and see a more convincing daily trend change. The dollar, still weak. Started its bounce. We know anything under 93.91 is just a lower high. We cooled off the daily RSI. Could this be a daily bear flag? Absolutely. So again, I've highlighted a number of times the weekly RSI and its historical bounce points, but just be aware that those historical bounce points between 25 and 28 over the last 12 years, it does open the door where we could see this daily bear flag and another leg down. Because that other leg down, if we get it, is only going to have us on the weekly time frame just starting to get to those levels. The RSI right now is 31. So if we see another leg down, then we start getting to 29, 28, 25, the levels that we historically bounce from. So keeping an eye on the bounce, but well aware that we could absolutely see another leg down here. So daily lower highs will continue to be our guide. We had a nice bottom fishing play for the metals and miners today. We had gold establishing this base of support, 19.24, 25, 24, 26, 27. You get the idea. Holding this base, breaking the hourly lower highs. Not a ton of bounce follow through, but again, a nice bottom fish with a very clear stop. Very low risk, high reward trade. Not necessarily high reward, but certainly higher reward than the risk. The low of yesterday on GLD was 180.78. We held that level by 15 cents. And the reward ended up being multiple dollars. So if you're going to risk 15 cents, we're not going to nail the bottom. Let's say you're risking 30 cents, 50 cents. You're still looking at a 4 to 8 reward to risk ratio. And the miners did the same thing. So GDX this morning, again, the low of yesterday, 40.74. We held it by 5 pennies. Let's say we're risking 10 cents, 20 cents. The reward ends up being over $1. Those are the trades that you want to position yourself in. You're risking 1 and your reward is 4, 5 plus. And when you're putting yourself in that scenario, you can be wrong 3 times in a row. And if you're right the 4th time, it's worth it. You come out ahead. I love those situations. Gold on the daily, tightening daily range. Is this our daily high or low being set? If this inside bar breaks bullish tomorrow, then we'll say yes. And we'll have a nice tightening range to be watching. So tomorrow's going to be important to end the week with the metals. Silver is much stronger than gold, very little pullback, and keeping the bulls confident. The daily uptrend was never lost here. We've been forming daily higher lows the whole time. We gave back a ton of the bull move on gold. We gave back a chunk of the silver move, but still very clear higher lows intact on the daily chart. Oil, I'm not sure what happened with oil today. Again, I'm just checking back in, but there was a 2.5% drop into a 3% bounce with big volume. Let me know what that news was, please, because I missed something. But It was a bear break of daily support with obviously zero follow through. The daily 12-period exponential support continues to hold, and I would be watching for a 4-hour lower high. I would consider anything under 43.21 a 4-hour lower high, and I'd be scouting a bearish entry if I was a futures trader or if we had some market hours ahead of us. And we're going to be watching for a 4-hour equilibrium into tomorrow. Natural gas starting the daily consolidation with the inside bar bear break. So we'll be watching for potentially first hourly oversold conditions. Here we are. And we're watching daily 12-period exponential support as a visual guide. Keeping in mind anything over 205 is a daily higher low. So that's where we stand overall. The tech sector saving the day. Again, I'm looking at my screen and it's financial sector down almost 1%. Healthcare down 0.3%. But QQQ up 1.4%. Keeping SPY strong. Apple all-time highs easily. Tesla all-time highs. Amazon still keeping an eye on all-time highs. Not there yet. We've got Google on the verge of all-time highs, less than 1% away. So there are definitely still a bunch of names holding on just fine out there. Liking OSTK recently for day trading opportunity. Nice volatility there. OSTK, GRWG, nice volume and volatility recently. Tesla always. That's where we stand. Have a good rest of your day. Have a great weekend, and we will see you next week.